Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 13th of June, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. Welcome. Going to go for our usual run through here today. Calendar, what we've had, what we've got coming up. We'll take a look at articles from major news wires. What are the geopolitical, fundamental, macroeconomic, central bank factors that are influencing financial markets right here, right now, and then we'll have a brief look at the financial markets themselves to see what's going on. So, first of all, let's look back before we look forward, right? So, looking back, the all the spotlights were initially on the CPI data, which came in. You see red here, red being negative for the dollar in this case, because it's looking at how it affects the US dollar. But positive for the economy because it means that the inflation is cooling. So you see all the measures in here better than expected. So that's a positive. Then we had and markets like that, obviously, slowing inflation. Then the Fed, well, in some ways, some of this commentary is saying, oh, the Fed's more hawkish because the dot plot chart showed them, the previous dot plot chart was looking for three rate cuts by the end of the year, and the dot plot chart now shows one. Although in his statement, Powell and in the press conference left the door open to potentially two rate cuts. Well, the market's pricing in between 1 and 2 anyway, right? So, and we weren't expecting 3. So because they moved from 3 to 1, it wasn't like that was hawkish for the market because the market wasn't expecting 3 anymore. We've moved a long way from that with all the Fed speak that we've had in the interim since the last dot plot chart. So that'll be, I don't know, 2 times 6 weeks. So 12 weeks ago, 3 months ago. So there's been a shift in the market. So I wouldn't say that the dot plot chart was particularly hawkish. It pretty much delivered what the market was expecting, if not maybe with the press conference keeping the door open to 2 rate cuts, and that's what the market's pricing in. The market's still pricing in definite 1 nailed on because that's what the Fed have told us, potentially as early as September, certainly by November meeting, and potentially 2 by the end of the year is what the market is pricing. And then I think we need to start looking further out, and we will start to do that going forward. For now, we're going to concentrate on the rest of the year. We're only in June after all. But, as we move through the summer, we're going to have to start looking at, what after the first rate cut, what are we looking at for rate cuts after that going into 2025? Is it going to be they're going to start the ball rolling and then maybe there's a little pause and then we look to see if they become more aggressive as we go into 2025. So that's what we got from the Fed. We'll run through that as we go forward. Let's go back to the calendar. Mustn't forget what we've got going on today. So let's take a look at the calendar for today. It's relatively light in here. We do get some ECB speakers, also some Fed speakers in here. Williams speaking today, Treasury Secretary Yellen speaking today, Bank of Canada Governor McClellan speaking today. So we've got some various central bank speakers. On the data front, initial jobless claims, not particularly big. PPI data, not particularly important, seeing as we've had the CPI and the Fed. Yes, it could move markets a bit when it comes out. They're both in 1 hour's time. Initial jobless claims, weekly data, doesn't usually move the market. So I've got PPI and initial jobless claims, but I don't think they're going to be, yes, they'll probably move the market initially by an amount, but unless you're trading very, very short term, it's not going to be a significantly large impact in my opinion. So that's what we got coming up as we go into today for that data in 1 hour's time. So let's go to 5 things to start your day from Bloomberg. So Fed fallout. So that said here, look, Fed was more hawkish on interest rates, but that was only compared to the last dot plot chart, really, and it wasn't more hawkish than the market expected. Traders have held on to increased bets that the Fed will move cut later September. Futures contracts for the S&P 500 and Nasdaq are pointing higher. Dollar and Treasury is a little changed in here. Europe more cautious tone out of Europe after rallying with the US stocks on Wednesday yesterday. European stocks now giving a lot back in here, and we've got these concerns around obviously the French election, and the ECB are more cautious now, having cut rates already, and now more cautious on further rate cuts. Musk's pay deal, we don't really care about. Nuclear boom, surging uranium, don't care about, and we've covered the data. So stock futures hold firm as traders away Fed path. S&P 500 futures a little change this morning. Nasdaq is still even higher. Obviously, potentially lower interest rates rates, lower yields is what the market's starting to price in, is more positive for growth stocks. Growth stocks equals tech stocks. Growth tech equals Nasdaq. Okay, so Nasdaq doing even better this morning. It's up about another 5-6 tenths last time I looked. US inflation broadly caused encouraging finds for Fed. So we know that, okay, below forecast. And it wasn't just one piece of data, as we've already said in here. It was across the board, all the measures, the month on month, the year on year, the core and the headline data, all better than expected. Traders still pricing in 2 Fed cuts, with the first nailed on for November, potentially as early as September. Bond market splits from Fed again. We're betting on 24. So Powell struck hawkish tone, but traders seized on the CPI report. Bets the first rate cut may come in September. So we'll look at all this in a minute when we get to we'll go to the CME chart tool. The Fed cut tool. Fed signals 1 rate cut this year, but keeps door open to 2. Powell describes higher inflation projections as conservative. Officials boost estimates of long run rate amid strong economy. So, and then again from Live School, you can get this below where you are right now. This is a European briefing. I think the US briefing comes out bang on when we go live here. So, but this is the US briefing. But again, looking at Fed projections, just 1 rate cut, focusing on that. Nasdaq futures surge. Tech giants offset Fed caution. And in here, I think again it talks about. Did I get it? See in here? No, just the volatility in the markets. Once or twice. So yeah, we're waiting to see really. We'll take a look on, but overnight in the Asian stocks mixed 4 tenths down on the Nikkei actually. Hang Seng was up 1%. European stocks actually down today, having been followed stocks higher yesterday. US stocks higher, notably down today. Concerns from the ECB, ongoing concerns about the French elections. But you can see in here we had a good day yesterday. It's not showing all of these. These haven't loaded, but we're up between 1 and 1.5% on the major indices yesterday, and you can see in here a tenth up on the S&P, but the Nasdaq's up at 6 tenths in here as we speak. If we go take a look at the dot plot chart, then this is where it gets interesting. So this is September now. So we've now got only a 38% chance of rates being unchanged in the September meeting. So the market is now pricing in 62% chance of a rate cut at September. By the time we get to November, pretty much nailing on 75% chance now of a rate cut, only a 25% chance that we don't cut rates. And we get out to December year end, and that's for the rate cut now. So all of this is a rate cut. So no rate cut, only a 7% chance. Well, the Fed have told us they're going to cut by the end of the year. So we expect 1. So this is likely unlikely. I mean, even 7% is, why have we got 7% when the Fed have almost said it? But if you look at here, we've got a 32% chance of 1 cut, and now if you add these up, we've got what's this there, 42, 52, 59, about 60% chance the market is pricing in of 2 rate cuts or more by the end of the year. Okay, so we've got 1 rate cut, about 32%, and then about 60% chance of more than 1 rate cut. So the market is starting to certainly continue to look at and hold on to the fact, and the economists as well, the major, economists around the major investment banks, hanging on to the fact, and the projections are still potentially 2 rate cuts. And on the yield side, we got this surge up in price, down in yield. So we broke to below the yields in here that we set in the last week, and now we're heading down to yields not seen since the latter part of March. So a lower yield move, lower yields, higher prices on bonds, and that's all positive for stocks. And you can see here we've remained bullish on the 30-year, but if you go to the 10 years now and into the 5s and 2s, surging higher back up to and through recent highs and flipping. We highlighted that we may be doing this after previously anyway. Yesterday's we said, if we get the right kind of price action, and we certainly got that yesterday. So flipping back bullish in here, and obviously making new highs on the S&P and the Nasdaq in here, all-time highs. What's not to like, and why would we be anything other than bullish? So staying bullish in here. So I'm not going to run through all the individual charts in here, guys. But yeah, I mean, staying bullish. Take a look at the reports if you want to see where the key levels are. But there's no way I can't be bullish in here running into today. We're not only, the only thing is, are we overstretched? But in my opinion, no, we're not. We had a day of trading yesterday. A lot of longer term money is going to be plugging into their models and having a decision. And I wouldn't wouldn't be surprised if you get a follow through today, further upside as more real money comes into like a wall of money, as we've got inflation continuing to cool, the Fed pointing to at least one rate cut, and the market looking for 2 rate cuts by the end of the year, looking for the Nasdaq to outperform again, looking for those growth and tech stocks to pull the broader market higher today. So still bullish, looking for further upside. Check out the resistance levels in here where you might want to take profits if you are long, and just watch out for support if we do get some dips. We could get a reversal. You know, the market has had a good run up in the last week or so, and particularly last 48, 72 hours. So there might be some profit taking at some point, but for me, any kind of little dips in here, we're looking to buy the dip. All right, I'm going to wrap it up there, guys. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with the last webinar of the week for the TGI Friday webinar tomorrow.